in 2020 when Michael Saylor decided to buy Bitcoin with some of the cash that he had on balance sheet. I think that's been another really dominant narrative for these last few years, especially in the last year, where we've seen many a copycat come in and try to implement similar strategies, whether that's a Metaplanet, which is a publicly traded company out in Japan that was actually the best performing equity in the world last year, or you're seeing companies like Semler Scientific, many companies just raising capital to buy Bitcoin. What is your take or a view on this whole new development, whether MSTR in particular or this Bitcoin accumulation strategy for corporates in general?
Yeah, that's a complicated one. And I think there's two sides of the case that I think I could make. Like, one side of the case is, dollars world reserve currency, gold's probably number 2. Like, what's number 3? And when you look at like search engine results, if you're the first result, you get like 55% of the market, right? And like the second result gets 25%, and the third result gets, and then the rest of all the results through like page 10,000 get like 5% of all the clicks. Well, Bitcoin's the only thing that is kind of maybe number 3 in that. And then maybe you got the euro and the yuan, but they don't have like a real long-term like global reserve currency type of, Europe's in a real mess, and China is just not feasible. If anybody could go to like a gold-backed or like a gold standard, it'd be Russia because of their balance sheet. But like they're in demographic decline and nobody likes them because they're running around starting bushfires. So, if we've got the world reserve currency as America, and then we have all the physical gold and we have a bunch of Bitcoin with our citizens, and it's seeded out on balance sheets, through this Bitcoin strategy idea, like we own the top 3 search results. Like there's 85% of the traffic or 90% of the traffic. So, it's just a way to dominate like any of the potential monetary paths that the world could take. So that's one side of the case, right? Is like, oh, well, it's great to get Bitcoin seeded into all these areas, whether it's like, BlackRock putting it into model portfolios, 150 billion, 1 to 2%. They made that announcement, whether it's seeding it on with things like MicroStrategy. Now, the other side of the case would be, like I think Saylor and I just take a different approach to capital allocation. I look at the investing force, and there's a light side of the force and there's a dark side of the force. The light side of the force would be equity-based, cash flow-based, no leverage. It's very slow, it's very boring. Dark side of the force, you're perhaps taking on debt, you're banking on a capital gain as opposed to just kind of cash flow that's coming in, you're applying leverage, you're like zero down on the house or whatever. Like you can accomplish a lot in a very short period of time with the dark side of the force, but you can take your lightsaber and like lop off your arms and legs and not even realize that you just got margin called on everything. Right? Like it's very hard to get yourself margin when you're operating purely on light side of the force principles. It's like you can stay solvent longer than the market can stay irrational because you can never get margin called because you own the thing because it's equity based, right? And then there'd be like negative cash flow, and that's one of the great things with Bitcoin. Like even with gold, you might have to pay storage fees on stuff, but with Bitcoin, you can just custody it yourself, and so you don't even have storage fees to hold this asset. So it's like I can just hold this thing as long as I want. and so these are just two different philosophies towards approaching capital allocation. Now, I like these kind of principles of the provident living, with Shakespeare told us neither borrower nor lender be. So I don't want to borrow any money from anybody, and I don't want to really lend it to anybody. And if I lend it, maybe I'll lend it overnight and have super good parental guarantees with like the parent companies or whatever, which is nice. We can lend Bitcoin and make a few percent or whatever, but there's always a risk that they're not going to give it back to you. And then, there might be other yield strategies in the financialization, like selling covered calls or selling puts, or heck, you could sell naked calls. Like there's a bunch of dark side of the force to operate on. And so, so I personally, I like, I generate yield on some of my position by selling vol. both puts and calls, because you accumulate the USD. And that kind of gets to this speculation network effect. Like there's always going to be exchange ratios between Bitcoin and other assets. And when we have those exchange ratios, like sometimes Bitcoin's going to be overvalued and sometimes it's going to be undervalued. And so how do you like assess that? And for me, I like to use the Mayer multiple, which takes the current price divided by the 200-day moving average. And so that weeds out the dollar sign, and you just get a relative price. And then I can plot that over time and come up with standard deviation bands. And so I could look and see like, oh, Bitcoin relative to Apple stock, like the Apple stock is in the third standard deviation on the ultra cheap side. And, so then, I'd take the USD that I've earned from repo or earned from selling covered calls, and I'd sell Apple puts, and they'd probably expire worthless, and then I'd have more USD, right? Because Apple's probably going to go back up if it's at that very like outside band on the relative price. So these are things that we have to do, and so like you might have like a fundamental thesis that you want to acquire this scarcest asset, and you might even be right on the thesis that it's going to like go to this particular place. But just like any other asset, like it may be overvalued, it might be undervalued, and what can you do with like what type of productive capacity does it have, or are you buying it simply for capital gains purposes, which is dark side of the force. You buy a piece of farmland, and I have some farmland, and I get a rent check like every year from the farmland. It's triple at least to the farmer, and I'll get that rent check indefinitely. Now, does that mean that the farmland relative to the Bitcoin, like, yeah, the Bitcoin might outperform the farmland? It depends when you buy it, because you make money when you buy, and so not when you sell. So you like, and this is where I think Saylor might find himself in an interesting quandary. Well, okay, now he's got a big giant stack of Bitcoin, but he can't really generate any type of yield off it without completely smashing the market. Because you bring that type of supply. I mean, we have 25,000 Bitcoins in any given option expiry. So he could sell options on 5% of his like stack, and his investors would probably be upset if he gets called out on them. So he can't, like when you own an underlying, you also own volatility on the underlying, and that volatility is an asset in and of itself that is infinitely renewable, because you always get more vol, and you always get more data, you always get more days. And so like if as we move further into the financialization network effect, we're getting more savvy economic actors trading in Bitcoin. And so some of what may have gone into capital gains due to immaturity in the market and like all these kind of things that like prevented like price discovery in this more sophisticated way, like it might be, cash flow might be where a lot of the gain is going to be like extracted, right? And so as it becomes, we'll still have store value, and it'll grind its way up, but in a lot of ways we might be kind of like trench warfare, as opposed to being able to have these like 48x returns in a cycle, right?
Yeah, the shitcoin returns. Yeah.
Yeah, and that all is because it's becoming a much more economically substantive asset, And so 2020, it was a 120 vol asset. Now it's a 50 vol asset, and gold's an 18 vol asset. Like gold's not going anywhere. Like it hasn't gone anywhere. That's part of what makes it so economically substantive, and that vol comes down, and we have so many ways to like trade around with gold. We got all these gold leases and swaps and puts and calls, and it's integrated with financial system, and the nation states hold it, and the individuals hold it, and like there's so many economic actors with it, right? And Bitcoin, like it was such an immature market at less than $2 million market cap. Like there's no way to trade it. Like you're sending cash and envelopes around based on like Web of Trust and stuff. I mean, it's like crazy. And it runs to $1,300 in 2013 or whatever. Like you probably couldn't sell it even if you wanted to, because if you sold it and like moved the money into your bank account, like it's like your bank account's gonna get closed. And that didn't stop until like Trump kind of came in, right? So like there's just been such an immaturity in the market. Now the market's just maturing in so many different ways. And, one of those ways is like, Bitcoiners have to figure out, what am I going to do with this asset of vol that's around my Bitcoin? And Saylor doesn't seem to really, he seems to be just too large of a player to be able to monetize that in any type of a way, which makes me kind of think like, is there just like is it kind of like an overbuilding of supply, like in a housing market bubble? Like, is he just overbuilt his supply? Like, you got a bunch of supply and he can't rent any of it.
Yeah, he's got way too much vol to know what to do with, basically. And I guess...
Yeah, and the market's not really going to support, coming in, and he could come in with 5% of his stack and he would double the amount of like options, and if he comes in with that type of a size, like the market makers they're going to be licking their chops, so it's a, I like this very organic, light side of the force way of growing and methodically like taking additional territory in a very incremental way, in almost a glacial way. But when that territory gets taken, like it never gets given back.
Yeah, I think this is very much like an Austrian perspective on capital allocation. It seems, and it's, thinking about some of the folks who've maybe tried to kind of reinvigorate some of these ideas in the current sort of fiat financial system. I think about Mark Spitznagel with his like Tao of Capital, which again is all based on sort of these like Austrian economic views of sort of kind of growing gradually, having time be on your side as opposed to taking on things like debt that could cause risk of ruin. But it's interesting your point around how MSTR, maybe the way they're approaching this implies some decay in their Bitcoin holdings just because of say whether it's an 8% or $8 coupon on a pref or things like this. It is interesting because at the same time they are being valued at a NAV premium, which basically implies that the investors, perhaps if they really are focused on metrics that are now in style like sats per share or things like this, or Bitcoin holdings per share, which certainly is a new concept I think in the last few years. It seems people are betting that MSTR is going to acquire even more Bitcoin somehow, and that this will sort of keep on going on.